How bad will inflation be in the new year? Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate these turbulent times. 2022 could well be the year when inflation starts to hit adversely the stock market. To assess the scale and impact rising prices will have, investors need to appreciate that there are two kinds of inflation. One comes from the Federal Reserve printing too much money, which reduces the value of the dollar. Our central bank did this big time in the 1970s and early 2000s, in both cases leading to serious economic crises and high unemployment. The Fed was doing this at a slower pace before COVID-19 hit, and then again during its early stages. The second type of inflation is non-monetary, where prices rise because of government distortions in the economy. For example, thanks to onerous regulations, a house in California will cost 2 to 3 times a similar house in Texas. The two kinds of inflation can hit an economy simultaneously, which is what we've been experiencing. Leaders grossly underestimated the impact disrupting the infinitely complex and multitudinous supply chains around the world would have on the functioning of a modern economy. Each day, literally hundreds of millions of buy and sell arrangements and transactions take place. Abruptly and repeatedly upending these activities has led to the shortages and soaring costs we're experiencing. The economy is not like a light switch. Compounding the problem here is that countries have pursued different pandemic policies. The reopenings and reclosings have not been simultaneous. Moreover, many businesses have been destroyed or severely damaged, while others have boomed. Adjusting to all this is taking a toll. A non-monetary inflation will eventually sort itself out, if governments let it. But the Biden administration is waging a regulatory war against businesses, most notably fossil fuels. These actions are throwing sand into the gears of recovery. But the darkest cloud overhanging the new year is the more ominous kind of inflation, that is, undermining the value of the dollar. For instance, during the Great Inflation that began over half a century ago and lasted more than a decade, it was the monetary variety, oil went from $3 a barrel to almost $40. But crude did not become 13 times more valuable. Rather, the surging oil price reflected a weakening dollar. The Fed has been on a money-creating binge, but has kept over $1.5 trillion from flooding the economy through using a gimmick called reverse repurchase agreements. These kinds of schemes, though, almost always end badly. Moreover, the Fed says it will stop its prolific buying of government bonds by this spring. Our central bank recently has been financing almost half of Uncle Sam's budget deficits. What is likely to happen without the Fed as the big buyer? Higher interest rates than expected. This will be bad news for the economy and for stocks. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.